Hello dear viewers, hope you all are doing well. Welcome to revision time. In our today's video, we will be studying about double column cash book. In our previous video, we have studied about meaning of cash book, different types of cash book. We also looked into single column cash book. We studied about the meaning of single column cash book, looked into the format of single column cash book and posted the transactions into our single column cash book. Attaching the link over here, please go through the video. In our today's video, we will be studying about double column cash book where there will be two columns of cash and bank. But we know that there are three types of double column cash book, that is cash and discount column, bank and discount column, and cash and bank column. But according to our syllabus, we will be looking only into cash and bank column, double column cash book. Here in this column, in this book, there will be two columns of cash and bank transactions. To record cash and bank transaction, there will be separate cash and bank account. So it is known as double column cash book. So let us read out the meaning and understand more about it. We will be also looking into the format of double column cash book. So double column cash book, management can know the balances of the cash and bank at any time. It helps in the effective management of effective cash management. So by maintaining double column cash book with cash and bank columns on both the sides, that is debit side and credit side, it helps the management to know the cash and bank balance at any time. So it makes it easy to compare and understand about our cash and bank balances. So cash book is balanced regularly, which helps in avoiding fraud. Also discrepancies, if any, arise can be found and rectified. So our cash and bank balance discrepancies can be rectified, can be found out if there is any mistake, or if there is and also we can avoid frauds. So this is the format of our double column cash book. We have to write the heading as cash book. We have debit side and credit side. On the debit side, we have date, receipts, that is what comes in, ledger folio, cash column and bank column. So two columns for cash and bank. So it is known as double column cash book. On the credit sides too, date, here we record payments, ledger folio to record the ledger page number. Ledger folio is nothing is column to record the page number in the of the ledger where this particular transaction had been taken place, so that it makes it easy to compare this column this cash books and the ledger books. Here also we have cash column and bank column. Debit side, we record all the receipts, that is debit what comes in, because cash is a real account. We have stated that cash is a real account. Debit what comes in, so debit side all the receipts, and cash book credit side, because credit what goes out, so payments are all recorded on the credit side. For payments for receipts we have to write it as 2, and for payments we have to start our transaction by writing but. So let us take an example of few of the transactions and record few transactions in our double column cash book. So now let us read out these transactions and then post them in our double column cash book. The following transactions related to Tools India. Dated September 1, bank balance 42,000. September 1, cash balance 15,000. So these balances are nothing but which are brought down from the previous month, that is from August month. So what is brought down, closing balance of the previous month will be the opening balance of our current month. So both the balances have been given. September 4th, purchased goods by check 12,000. September 8th, sales of good for cash 6,000. September 13th, purchased machinery by check 5,500. September 16th, sold goods and received check deposited on the same day 4,500. September 17th, purchased goods from Murali in cash 17,400. September 20, purchase stationery by check 1,100. September 24, check given to Rohit 1,500. September 27, cash withdrawn from bank 10,000. September 30, rent paid by check 2,500. And lastly, September 30, paid salary 3,500. So our first entries will be our balances. We have to always remember that closing balance of the previous month will be the opening balance of our current month. So here on the September 1, both the balances, cash and bank balances are given. It will be affected on our debit side, receipt side. We have to remember that cash balance will always be we have to always remember that cash balance will always be debit balance, but there is possibility that bank balance can be credit balance too. There might be minus balance, I mean with negative balance too. In that case it has to be brought down on the credit side. What do you mean by this negative balance? Is that there is an account of bank known as overdraft account, where you have the ability to overdraw your account, in the sense that you can withdraw more than the balance in your account. In that case there will be minus, there will be negative back balance, then it will affect on our credit side. Here our both the balances are positive balances, so cash balance is 15,000, we will record it in our cash column. Bank balance is 42,000, we will record it in our bank column. Next entry, first both the entries is done. Next, purchased goods by check 12,000. Here, when we are purchasing, it is a payment to us. So, September 4 by purchases, we are paying it by check, which means it is a bank transaction. We have to remember, we have to read the transaction wholly. Here it's a bank transaction, so 12,000. Next entry, sale of goods for cash. When there's a sale, it's a cash sales, it's a receipt. So 8th September, 2 sales, cash column 6,000 rupees. Purchased machinery by check on September 13th. Check again 5,500. Sold goods and received check. Check again, but we are here it is sales, so 2 sales. Bank column now, because received through check on September 16th. Next, purchased goods. Two purchases in cash, it is 17,400. Next, purchase stationery. When it is only mentioned as goods, we always remember that we have to consider it as purchase or sale account. But when the specific asset or liability or expense or income is mentioned, we have to take that account into consideration. So here it is stationery account, purchase account, machinery account and sales account. In that way, we have to consider when purchased goods it is sold, then we have to take purchase and sales account. We cannot write goods account. When there is purchase of asset or any income is coming in, any expenses, or when there is a liability, then we have to mention that particular account. So here purchase 1,100. Next, check given to Rohit. By reading this, what do we understand? Check given to Rohit, which means it's a payment by Rohit account. Check is given, so 1,500 in bank column.
cash withdrawn from bank 10,000 rupees. This is very important entry. We all have to understand the basics of such entries. Here we can see cash withdrawn from bank. Here both the accounts are coming into consideration. Cash account also, bank account also. If you read the transaction, you understand that both the accounts are coming into consideration, cash account and bank account. Cash withdrawn from bank, when you are withdrawing, you are receiving it. So here you write, why are you receiving? Because you are receiving, you have withdrawn from the bank. How much? 10,000 rupees. Cash you are withdrawing. Same sense, in the same sense, cash withdrawn from bank for your bank account, it is a payment. So by cash, bank column, 10,000 rupees. When in a particular transaction, both the bank and cash account are coming into consideration, such accounts are known as contra accounts. And in our ledger folio, you have to mention it as capital C. You need to mention it as capital C. Let us read out the transaction again. Cash withdrawn from bank 10,000 rupees. Here you understand that both cash and bank transactions are coming into consideration. But you are withdrawing cash, which means you are receiving cash. So receipt. But from where are you receiving it? See, we are writing the medium. You are receiving cash through sales. Correct. Now here you are receiving cash from bank, cash account 10,000 rupees. Similarly, for your bank, it is a payment. So payment of what? What are you paying? In cash. By cash, bank column 10,000 rupees. Since when there is a contra entry, when both the bank and cash column comes into consideration, such accounts are known as contra accounts. And in our ledger folio, you need to write it as capital C to differentiate that this is a contra entry. I hope this is clear to you. Let us move to our next transaction. Rent paid by check 2,500. Again, here it's a payment by rent, bank column, because it is paid in check 2,500. Paid salary by salary in cash 3,500. Now let us total our both the columns. The total of our cash column here is 31,000 rupees and the total of the bank column is 46,500. Similarly, here the total is less, so we have to balance the accounts by balance carried down. Balances of the both the accounts, just add up the totals of the both the account and then minus and find out the balance. So here our cash balance is 9,000 rupees and bank balance is 15,000 rupees. We have to bring down this balance to for our next one to So this is it. This is how we have to record the transactions in our double column cash book. Here only thing we have to remember is receipt sides. We have to record all the transactions from which the money is coming into the business. Payment side we have to record the transaction because of which the money is going out of the transaction. Another important thing to remember is contra entries, where in a particular transaction both cash and bank accounts come into consideration, and for such accounts we have to mention in our ledger folio column as capital C to differentiate it as contra entry. This is it for today's video. In our next video we will be studying more about cash book. Until then, subscribe to our channel, like our video. Happy learning.